Welcome. You're watching a video on how to make career in Fintech faster than IT, part 1. This is the new era that emerged by the initiatives of the two big industries, namely IT and finance. The venture is to create technological innovations that will benefit all. You will learn what are the technology components that will be exploited to bring new solutions, the growth potential, the scope of opportunities, and how to get there. Simply defined, we will simply explain these terms that are commonly used in fintech. The popular terms like Bitcoin, cryptocurrency, blockchain, artificial intelligence, machine learning, and more. Because you always wanted to know what it is, but no one told you. You did not try to find out yet. Simplicity is our approach, and so every effort is made to use only commonly used words. We are confident that you will like it and understand what these technical terms mean. Money market. Let us review the common scenario that happens day in and day out. Someone is in need for money badly but cannot get the money through legitimate processes. We cannot just ignore that. There is nothing new. Because things move on. How? Let us understand. P2P lending. Money is always there. Money lenders lending against pledging assets like gold, valuable documents, etc. have always been there and will continue to lend. But it is not good enough. There are more people in need, and the need is becoming very big. The people who have money want more return or interest than what is possible through normal means. Desire is always for higher interest, but at lower risk. They want to lend to people if there is someone ready to vouch for. So the P2P platform came up that supports credibility of both sides. Digital currency. We use digital currency. The popular and legitimate digital currencies are shown as examples. Reward points for motivation of the loyal customers as a frequent flyer in airlines. Points earned as a prompt payer of credit cards. Facebook credits, Amazon coins, etc. have intrinsic value. All these can be used to buy goods and services, but we cannot transact with them like real money. Such digital currencies are supported by the promoter and will become a credibility issue if not fulfilled. Crowdfunding. Many innovative business ideas that could not be implemented for want of funding through legitimate systems also seek support of the rich who are willing to bet. Certain major investments for large businesses require multiple investors, like capital market players. In this model, venture capitalists and the new businesses do not go through routine sanctions for deploying money in business, because the digital money used is not part of the economy that is governed by any government. The digital money can be exchanged across the world. These venture capitalists bet only with a proper system that protects their investment. They also like to see the growth in value of their money. Details of the transfer of digital currency when sent over internet is protected by using electronic encryption. Encryption means transfer of digital currency sent from one to another is locked using a pair of electronic keys. One is used to encrypt before sending and the other is used by the receiver. If the transferred data is changed before received, the key will not be valid. Even with the most powerful supercomputers, the key cannot be tampered, even in a trillion year. Such digital currency with a well-protected system of exchanging is termed as cryptocurrency. This is how cryptocurrencies evolved. Cryptocurrency. We all know the currency every country uses. Dollar in the United States of America, sterling pounds in the UK, and the rupee in India, and so on. The entire economy uses the local currency as the only measure of revenue, profit, production, sale, etc. The salient aspect of these cryptocurrencies is that the transactions can be tracked and value ascertained. Cryptocurrencies exist outside the monetary system of the country, and government has no control over them. But they help the economy with investments. Bitcoin tops the list of cryptocurrencies by the intrinsic value, market capitalization, etc. Over and above the encryption, blockchain technology is used by Bitcoin and also for other cryptocurrencies. This is also used by many other industries. We will explain blockchain technology separately in a little while. Bitcoin and other cryptocurrencies are restricted by some governments across the globe for a variety of reasons, like no support by government, legal regulatory systems, competes with virtual currency tied to local currency created by governments, speculative and risky, loss of tax revenues, can lead to money laundering, fear of a parallel economy. Bitcoin in India. Bitcoin is the most popular cryptocurrency, but it is not accepted worldwide because the local governments restrict it or banned it. Bitcoin has many unique features. Can be bought and sold. The transfer is protected using encryption and blockchain technologies, either for keeping in a wallet or for buying and selling. This is traded in cryptocurrency exchanges. It is extensively used by venture capitalists for funding innovative new businesses. Bitcoin and other cryptocurrencies are not governed by governments. This was banned by Reserve Bank of India, which is RBI, in the year 2018. Supreme Court of India gave a verdict on the 6th of March 2020 that RBI did not have sound reasons to restrict crypto. Cryptocurrencies are running global parallel economies. These have both positive and negative impacts. Blockchain technology in Fintech. Conceptually, we will understand how two salient features of blockchain improve speed of transactions and security compared to the traditional computing system. First feature of the blockchain. In the traditional system, all transaction details are centrally stored in a database. This gives rise to many issues like quick access. Blockchain uses distributed data storage for high performance. Every user in the network has a copy of the complete data that is constantly updated. So there is no delay in fetching data, and the data is always up to date or current. Second significant aspect of blockchain is for the security of data. The transaction data are contained in blocks for each asset or an item. First transaction is entered when the asset is created. In this example, when the house was built, transaction number 1 is created. There is just one block with just one transaction. Subsequent transactions will be added to a new block and chained to this. When the sale happened, it is the second entry. Transaction number 2 is added and a new block is created. The second block is linked to the previous block. The next transaction of taking a loan by mortgaging the property is added only to altogether a new block. This block is chained to the previous block. As and when transactions happen, a new block is created and chained. Blocks are protected by tamper-proof electronic hash. Adding a new transaction is only done by the authorized persons in the network, so the data is securely kept and can be relied on. Summing up, the blocks in the chain hold the data transactions. They are open like a public and distributed ledger. Everyone can see because all participants in the network have a copy synchronized, but only the authorized user in the network, namely miner, can update. Anyone in the network can initiate a transaction. The transaction is added into a new block after verifying by the authorized person called miner. We will limit the scope of our understanding because anything more will become highly technical. Blockchain is best suited for every industry, particularly for medical records, record of transactions, of properties, etc. Bitcoin uses blockchain technology. Every transaction is a record of who has given each coin to whom and when. Blockchain has a date stamp in every transaction. This is good enough for all the participants. As we complete the part 1, let us sum up. We learned about digital money, cryptocurrency, Bitcoin, and blockchain technologies. All these and more of the technologies are the foundation for the Fintech. We will see the rest of the technologies like artificial intelligence, machine learning, deep learning, and big data in the part 2. We will also learn about the application areas, career opportunities, and the trainings for Fintech. Both parts together will enlighten how to make a career in Fintech that will be faster than the IT. If you liked this video, please let us know what is that you liked most in this in your comment. Please subscribe and await the notification of the publishing of part 2, and we also recommend more videos in this channel. Best wishes. Thank you for viewing.